Next, the new or modified details that need to be filled in by the recipient. Basic details same as GSTR1, GSTIN, name of business and period of tax return. The next one, details of import of goods and services. These are important because the supplier would be a non-resident, would be outside India, and therefore the authentic details that the government can get on these transactions would come from the importer, who's a registered taxable person. And this is why he has to be specifically careful in filling in this information. It is not auto-populated. Import of goods, import of services. There is slight difference in the details that are asked for these two, so we'll split it and we'll check out the details relating to import of goods. When we talk about goods, we are going to talk about the normal supply of goods as well as capital goods. In this section, the details that the recipient will have to fill in is the bill of entry. He'll get a bill of entry once the goods enter the Indian territory, or the import report. He'll have to give the details of this document, the bill of entry number, date, value, HSN code, the tax rate amount, which is going to be IGST. We know that imports are deemed as interstate supplies and therefore IGST would be levied. If he is eligible for input tax credit on such inputs or capital goods, then he'll have to show the amount of IGST claimed as ITC and the ITC that is available for the month. As always, any revision to these details in earlier returns will have to be reflected in this return. Simple. We are going fast because they are normal details that we've discussed in GSTR 1. Coming to import of services. In this situation, there will not be a bill of entry because no tangible item is entering the Indian territory. What you'll have is only an invoice, and therefore the details of import of services would be just the same as any other local supplier of goods. Invoice details, invoice number, date, value and SAC code, tax rate and amount, only IGST and not CGST or SGST because imports are deemed interstate. Same conditions for ITC. If eligible, give the details related to ITC credit. That was the second category of new or modified details that the taxpayer has to file in. The third is related to TCS credit received. This is different from TDS. We've seen what TDS is. The recipient is supposed to pay tax and the amount of invoice to the supplier after deducting a portion of tax. While in TCS, there's the e-commerce operator element involved. Recall, we've discussed all of this while we checked out who is liable to register in Module 4. Let's just quickly recap. There's a supplier who's selling his goods or services via an e-commerce portal. E-commerce portal is required to collect tax from the recipient and pay it to the government and not the supplier, a portion of the tax. The recipient is someone who buys goods or services from the e-commerce portal and pays the taxes as well as the invoice amount to the e-commerce portal. This is the situation. The e-commerce portal collects payment for invoices as well as taxes from the recipient. He pays off the invoice amount and the portion of tax to supplier and pays to the government the portion of TCS he is required to collect, tax collected at source. This is what we are talking about. The recipient will receive credit for the TCS remitted by e-commerce operator. It is not the supplier who is remitting this tax, and therefore this information will not be captured in GSTR 1. That's why it's an additional information to be filled in by the recipient himself. In this category, the details that are required to be filled in are the GSTIN of the e-commerce portal. The e-commerce portal is paying the tax to the government. For the government to verify, link the tax paid by the portal and the ITC claimed, he'll have to know the GSTIN of e-commerce portal. The merchant ID that the e-commerce operator has allocated to the supplier, the gross value of such supplies, the value on which TCS is deducted, the taxable value, and the TCS amount, IGST, CGST as well as SGST. Next, the details related to supplies on which the supplier is not required to collect any TDS. What could these be? If the supplier is someone who's opted for the composition scheme, then he is not required to collect TDS. If the supplier is unregistered, or if the supplies itself are exempt or nil rated, or they are non-GST supplies. In these three scenarios, the recipient will have to fill in the details because nothing will be captured in GSTR1. No tax has been collected, therefore it's an additional detail for this reason. What the recipient has to do is split interstate and intrastate supplies and then fill in HSN and SAC code, the value of supplies which are received from all these three: compounding taxable person, unregistered supplier, or supplies which are exempt, nil rated, or non-GST. Those are the only details required so that government can keep track of the transactions occurring in the country. The next, input tax credit, and this is the most important detail in GSTR2. It is on this basis that the government will grant input tax credit for a recipient of taxable goods. The details can be split into three: ITC claimed, ITC on invoices on which partial credit has been received earlier, and ITC reversals. If it's claimed, then along with invoice level details, the input flows in, and that's all that matters: invoice, credit note and debit note, as well as the details of imports. Along with those details, we've seen that the recipient has to put in details of input tax credit claimed against each of the documents and imports. The second one relates to partial credit. You've received some invoice in some earlier period and you've claimed a portion, say 60% of the input tax credit you're totally eligible for against that invoice in an earlier period, and now you can claim the remaining 40%. In this situation, as soon as you put in that invoice, the details of partial credit that you've received in earlier period would be auto-populated, and the remaining would just be a calculation: total eligible minus already credited. That will be your input tax credit for this period. The third and last category under input tax credit relates to reversals. This can be for any reason. Maybe you've claimed excess credit in previous period, or you've realized that there's double taxation, anything of that sort. You'll have to fill out the reason for reversal, which is available as a drop-down menu. You have to choose one of those reasons and fill out the amount of IGST or CGST or SGST that you're reversing through this return. That's all. Input tax credit. This is the most important detail under GSTR2. The last one relating to reverse charge. Let's understand this a little bit, just the underlying concept. So you have reverse charge. The recipient has to pay to the government. The recipient is filing GSTR2, so he has to file details of tax that he's paying to the government on reverse charge basis. The liability to pay arises at the time of supply. We've checked out in detail the time of supply in module 5. For reverse charge, it would be earlier of date of receipt of goods in case of supply of goods, or date on which payment is entered in books, date on which payment is debited in bank, or date right after 30 in case of goods, or 60 in case of services, days from the date of issue of invoice by the supplier. This was the time of supply under reverse charge. So we can broadly divide these 4 dates into 2. Before receipt of invoice, the first 3 categories: date of receipt of goods, date on which payment entered in books or debited in bank. So they are all time of supply before issue of invoice. or time of supply arises after issue of invoice. The invoice is issued by the supplier. So in case of recipient, you'll have to see when does he receive the invoice, before receipt of invoice or after receipt of invoice. If the time of supply falls after receipt of invoice, then the details will be automatically captured in the invoice level, transaction level details, which are auto-populated from GSTR 1. But in a situation where the invoice has not been issued, the time of supply has occurred because of the first three reasons, then the details will have to be captured separately. Obviously, if there's no invoice, the transaction level details don't exist and they cannot be auto-populated. That's the reason why this detail the recipient has to fill in separately into GSTR 2. Let's check the details that the recipient has to actually fill in for reverse charge. There are two broad categories. One, that the time of supply is in the return period, the GSTR 2 if you're filing for September, and the time of supply has also occurred in September, but you've not yet received invoice. That's our situation. The second situation is where the time of supply was before the return period, say in August, but you've received the invoice now in the current return period, that's September. In the first situation, where you've not received the invoice but the time of supply is in the return period, the liability to pay tax or actual payment of tax would occur in the return period, because time of supply is the date on which the taxable person is liable to pay tax. In the second situation, the tax would have been paid earlier because time of supply was before the return period. There will be different sets of details for each of these categories. The first one, where the payment is in the return period, you'll have to fill in the GSTIN of the registered supplier or the name of the unregistered supplier, the state code, the place of supply, the reference document. Why are we calling it reference document? There will not be any invoice because that's our base case. No invoice but POS in return period. You'll have to fill in the document reference number, date, HSN or SAC code of the goods or services received, the value in the reference document, the tax amount as well as rates for all three types of taxes, and any amendment to these details that you filled in earlier return will have to be reflected in this current return. If you've amended details of August return in September, you will have to go and reflect it in GSTR 2 of September. That's the first situation. Second, where TOS was before return period and taxes paid earlier, simple. You'll just have to give in the invoice details. You've received the invoice in this period, you'll have to give in those details, number and date, as well as transaction ID. What is this ID? When you had paid tax in an earlier period, the tax system, GST system, auto-generated a transaction ID number and assigned it to your tax payment. You will have to give in that ID. There's a very good logic. The government would want to link invoices with the payment of tax against each invoice, and this is what facilitates that linkage. You'll also have to give the amount and rate, of course. That's relating to reverse charge, and with that we've checked out all the details that are required to be filled in GSTR 2, whether they are auto-populated or they are new additional details that the recipient has to fill in. And with that, we've seen statement of outward supply as well as statement of inward supply, GSTR 1, GSTR 2. Remember, a normal registered taxable person will have to fill in both these documents because a business will always have inward supplies as well as outward supplies. That's the transaction. Now, there's one thing missing here. If the supplier has filled in certain additional details that the recipient does not agree to, how is he going to check exactly what are the details that the supplier has filled, or vice versa? Because we are dealing with auto-populated details, the counterparties need to check the other's returns for related details. If they agree or disagree, they need to have the information in hand to verify whether all the details filled are correct or not. There are provisions made for this as well. The recipient related details that the supplier has filed in GSTR 1 for recipient A will be sent to recipient A in GSTR 2A for checking purposes. This GSTR 2A is auto-generated from the GST tax system for the recipient's particular information. GSTR 1 could have hundreds of recipients whose detail the supplier is filling in. What the system does is picks out each recipient's information, makes a GSTR 2A for each of the 100 recipients and sends it to all of these 100 recipients. That's what is auto-drafted from the tax system. Similarly, for the supplier to check the details that the recipient has filled in GSTR 2, GSTR 2 auto-drafted picked out information related to supplier is sent to him in GSTR 1A for checking purposes. Let's not get into the details of what GSTR 1A and 2A send because they are auto-generated and it does not matter because you don't have any action on your end to generate these forms. Just for your information, here's a laundry list of all the system-generated forms 1A, 2A, 4A, 6A and 7A. We've discussed the first two, the remaining three in the coming videos. With that, we've checked out the first two forms, 1 and 2 relating to normal registered taxpayer. We have two more to go, 3 and 9. We'll go into those in the next video.